Reading is fundamental.
What's up, everybody? This is DeWitt coming to you with another review for Literacy Kings on books regarding money, investing, finance, and economics. And the review that I'm doing today is for a book entitled Security Analysis by Benjamin Graham and David Dodd. And Security Analysis, which is a really large, thick book. I mean, this book, I believe, is 800 plus pages. It's almost like a weapon, it's so large. But this book is a classic when it comes to understanding investments in the stock market. Many long-term investors, many institutional investors, many people who manage money for a living, manage other people's money for a living, they have repeatedly used security analysis for decades as a cornerstone book for understanding what they do and how to do it better. Benjamin Graham is the person whom Warren Buffett has leaned on the most in his career, according to Warren Buffett. He's the person that Warren Buffett has leaned on the most in his career in order to better understand investing and how to invest his money, other people's money, and so forth. David Dodd is Benjamin's friend and assistant who also is very well versed, or was very well versed on investing in the stock market. I always say that Benjamin Graham and David Dodd were sort of the historical antecedents to Warren Buffett and Charlie Munger. They set the groundwork for those two. So this book is really important in that aspect. It was originally published in 1934, right? So we're talking about almost 90 years ago, and it's still being republished in different editions to this day. Benjamin Graham was one of the best, or typically known as the best value investor, right? The person who looks at stock price or looks at a company and determines the intrinsic value, compares the intrinsic value to the stock price, and only invests when the intrinsic value falls below the current stock price for which it's trading at. That is a very quick synopsis of value investing. Benjamin Graham is the father of that style of investing. Warren Buffett has adopted that style of investing, and it has made him obviously billions. So Security Analysis is a book that explains that process. How do you determine that process? Or how do you determine intrinsic value of a company, or of a business, or of a stock? You do the fundamental analysis. And this book talks about how to do that fundamental analysis, right? Looking at the assets of a company, looking at the earnings and the earnings report of a company, looking at the dividends. Is it a strong dividend? Is it an increasing dividend? Have they cut back the dividend? Why? Looking at PE ratios, which has fallen out of favor as of recent because everything is just so high now on the stock market. Everything is so inflated in terms of price, right? But Benjamin Graham was a long-term proponent of understanding PE ratios, not buying a stock if the PE ratio is too high, and investigating or looking for stocks that have a PE ratio that is low. Those are the ones that will be seen as attractive. This understanding of fundamental analysis, how to do fundamental analysis of stocks, all types of stocks, preferred stocks, common stocks, and so forth, as well as how to do fundamental analysis for bonds, right? Understanding what's a good bond to buy, what's a bad bond, what type of interest rate are you looking for, what will it mean going forward. Security Analysis breaks all of that down in 700 plus pages. It also talks about investors needing to consider their personal financial position before they buy into a stock. So it's great to look at a stock or look at someone like a Buffett or other great investors, historical investors, and see what they're doing and say, I'm going to imitate that. Whatever they buy, I'm going to buy. Whatever this person recommends, I'm going to buy. Whatever CNBC says, I'm going to buy. All of that's great, but what Benjamin Graham and David Dodd talks about in Security Analysis is one thing that each investor should always keep in mind is that particular investor's financial position. When you have a little bit more cushion to do more things, to buy more stock, then you can be a little bit more and lean more so into what Benjamin Graham talks as speculation. If you don't have a lot of money to play around with, you don't have that large cushion, you're really just trying to just get pieces at a time, then you really have to be cerebral and think about just strong investments only. So that's the first thing, that investors should always take a strong internal look at their financial position, right? In addition to that, it is important that everyone understand their own personal temperament, right? Because some people they're better at stomaching risk than other people. So some people can get into sort of high growth stocks, or nowadays these super tech stocks that have just incredible volatility, and they're okay. But there are some people who cannot take that volatility, right? When they see that a stock drops 10%, 20%, 30% in their particular portfolio, it really ruins their day, ruins them psychologically, emotionally. They're just not the same. So understanding personal temperament is another major component that Benjamin Graham and David Dodd always talk about in Security Analysis in their other books. When it comes to the value investing piece, that Benjamin Graham is known for, he pushes value investing simply for the fact that he says it's always great to buy great assets or great stocks, right? Great assets of any kind. But when you're buying these assets, these stocks and these companies, yes, it's great to buy a strong company, but it doesn't do you any good if you buy the strong company at the wrong price, right? You want to get the stock when it has the most potential upside. So if you're buying Apple, which is always a strong buy, you're buying Microsoft, which is a strong buy, Google, these things like that. It's great to have those in your portfolio, but if you get them at too high a valuation, too close to an all-time high or above an all-time high, at some point they're gonna come down. They have nowhere to go but down, and now you're in the negative with these great companies. It's almost as if you didn't buy a great company at all, because now you have to wait even longer to see the return on your investment. Right, so you always want to make sure that you're doing your intrinsic or you're doing your fundamental analysis so you get the proper intrinsic value, which is not a perfect number, right? It's always an estimation by any human being, but you want to get as close to the intrinsic value as possible so that you can get the good assets at the right price, not the wrong price. How do you get a lot of this information? One of the places that you look, according to security analysis, you want to look at the annual reports and the quarterly reports of companies. Many people find those things to be very boring, but understanding that boring investors usually turn out to be the best investors, right? Warren Buffett, he hangs his hat on tediously going through reports, going through analysis, going through written information about a particular company in order to find out the deep detail and information that he knows to make a quality decision. Buffett talks about reading 500 pages a day. And some days he's just allotted on his calendar just to read, right? Nothing else but to read for that particular day. That is something that he picked up over the years studying the process of Benjamin Graham and David Dodd. Security analysis talks about that, right? Talks about understanding the difference between investment and speculation, right? Investment comes from getting a good idea of the asset that you're getting into, studying it for a while, and then making a cautious decision. Speculation is, I'm just gonna buy this asset because I think it's gonna go up. I don't care what it's about, what it does, what it produces, what the services are. It doesn't matter. It looks good, sounds good, I'm jumping in it. That's speculation, right? That's not what you wanna do. Speculation leads to bubbles. Bubbles lead to collapses, and collapses lead to recessions, where everybody loses. So you wanna be very careful about that. And then they go into deep detail, breaking down the pros and cons of investing in a stock versus a bond, depending on what the economy is at the time, interest rates for the bond versus the return for a stock, dividends included in that return. A lot of things to think about in those two sort of comparisons. So security analysis, again, it is a Bible for many institutional investors, personal investors as well, and people who just manage money for a living. And it's been, again, published in a number of editions. I believe this one here I have, this is the 6th edition. So it just tells you the popularity of the book. I recommend it for any and everybody who is serious about the stock market, whether you're a retail investor or an institutional. I believe in checking it out. To be honest, I wouldn't say read the entire thing. You don't need to read 700 plus pages, but use it as a reference. For those of you old enough to remember encyclopedias, use it like an encyclopedia. I've used it, went through it, did my highlighting, taking my notes and everything, touch on the things that I need to learn, and then you can always revisit it because it has so much wonderful security analysis by Benjamin Graham and David Dodd. Please take a look. Check it out. You can get it, still being published to this day. Bookshelves, different bookstores, or of course online. DeWitt Scott, Literacy Kings. Peace.